to the tweet where you want to go in the.
All right, we are live, special edition of Lumida Non-Consensus Investing. I'm really pleased to be joined by professional money managers. We've got Quinn Thompson, who is the founder and CIO of Lecker Capital. It's a new crypto hedge fund. Dimitrios, who is from Ithaca Protocol, who's a crypto options trader. And Nick Rygiel, who is from Ironclad Financial, ex-Merrill crypto TradFi convert, much like myself. So look, the topic here is Ethereum. Is it bananas, or are we going to the banana space? So there's a lot we want to get into. We want to get into where we've been, where we are now, where we're going, and really excited to dig right in. I'm going to share my screen here, which shows the CoinDesk ETH index. And you can see that we've had, quite a rally and then a pullback in the last 2 days on the announcement that, not the announcement, on the speculation, I should say, from Bloomberg, particularly James and Eric over there, who've done a great job, covering this, that the SEC will imminently approve the Ethereum spot ETF without a staking feature. So the market is anticipating that, and let's get into it. Quinn.
Yeah, no, great to be here. Thanks. Thanks for having me, Rob. Yeah, it's been an interesting few days. I think, my kind of take coming into this situation, obviously had no idea that this would come this week, and it's quite the pivot. From my vantage point at Lecker, we focus a lot on the macro environment and kind of base our broader investment strategy around that, and then also a number of micro components. And really coming into this week and last week, you had I would say everybody on one side of the boat in terms of positioned hedging their ETH and over allocated to Bitcoin and Solana relative to where maybe ideal portfolio would be if there's an ETH ETF. And ETH was kind of left in this middle ground for the last 6 months, ever since the run started on the rumors of the Bitcoin ETF. It sat between Bitcoin getting the institutional flows and Solana getting a lot of the new money is where a lot of the activities occurred. And we've seen obviously a huge re-rating overnight on the ETH, BTC, and other relative value ratios. But to me, I think there's still a lot of room here to go. I think people, price drives narrative, and then narrative drives price, and price goes again. So I think there'll be some digestion of this, and what I'm seeing is across a broader supportive macro environment with rates lower. There's obviously still inflation, but the Fed has signaled, unlike 2022, they don't plan on hiking. They actually plan on easing. They've rolled back their quantitative tapering, and a lot of interesting signals lining up here for a pretty supportive market for crypto.
Great. And there's also a post that I included from you in the thread, so folks can take a look at that for more here. You also had a great interview, I thought, or your podcast On the Margin this past weekend. So I highly recommend folks have a listen to that. Dimitrios, what's your perspective?
Yeah, these news are huge. I associated alongside the political developments over the last 24, 48 hours. As was being discussed, we have SAB 121 not to be vetoed, perhaps. We have FIT. We have the FDIC resignation of the chairman, which of course is for different reasons, but I don't think it should be somehow seen as a loss for the Warren fraction within the Democratic Party and its stronghold on the perspective of how financial sector would be regulated going over the last few years and going forward. So as always, the market cannot absorb this quantity of news as quickly as one would being knee deep on crypto Twitter all the time. I had tweeted, one of the tweets I sent earlier today was that in the various market roundups I receive from investment banks, no one actually mentioned it. So maybe they will mention it today, but again, I'm based in Hong Kong, right? So it's late my day. So at time, neither in the morning or the afternoon, it never really showed up in any of the roundups. So that cannot in any way imply that the news can be so quickly priced, especially us having been into the being in the space as actively as we are. We can see a lot more the broader repercussions about what happened rather than just the optical, there is an ETH ETF coming up. Even more so because I'm in Hong Kong where actually we have an ETH ETF, right? Or for the last few weeks, and it hasn't really made any difference, but it's a very different story.
Right. And I've got on the screen here's a tweet you had on May 10th. You talk about peak season for ETH negativity. You go on and you make your bull case here. So great timing to you as well. And on ETH, it's quite interesting. We all share a Telegram group, and it was like in the last half hour or so, the news starts hitting. And if you look at just what happened to Ethereum, Nick, you want to walk us through, what you saw yesterday and other thoughts?
Yeah, I think first, my viewpoint with basically everyone that I talked to, Ethereum was just kind of relegated to a next year type of mindset. So I think people that were holding ETH were holding ETH. We still have a preference of many folks that might be holding at a qualified custodian. They're not really going on chain. And I think their motivation was, all right, I might own ETHE for the discount, and I might have my positions in a self-custody wallet or on a exchange, but let's focus on Solana, or let's focus on what's happening with Bitcoin or the developing L2. So I think it was just more of an outside out of mind, and everyone just kind of assumed, based off so much toxicity from a regulatory standpoint, that we wouldn't really see any movement here before the election. And then when this came out of left field, then it was a frenzy of kind of dusting off the Ethereum playbook, if you will. So we saw that on chain. We saw flows going back. We see the total total volume locked on mainnet and Arbitrum base, for example, just going up, and we're just starting to see that interest peak on what do we do next? What's the next iteration?
Right. Exactly. And the political angle to this is interesting, right? So we saw the FDIC chair, Marty Gruberg, who nominally resigned on account of sexual harassment issues that have pervaded the FDIC. Now, those issues were surfaced a year and a half ago. So maybe the government's just a bit slow at holding people accountable, or maybe this is a repositioning of Democrats to participate in a new theme. Quinn, what's your take? I saw you smiling there. Looks like you got a view.
Yeah, that's the pace of government. So the funny thing is no matter how absurd it actually could have taken them. But no, I do think it's a broader theme. And to Dimitrios' point about the market's time to react to this, it is just such 180 monumental news in a number of respects that it is hard for the market to digest. You look at, I think the implications for this stem way beyond just Ethereum, but backing up to the fact pattern, it started with the SAB 121 bill getting through the Senate, and a large number of Democrats, including Chuck Schumer, New York, very, very liberal, crossing the aisle here and siding with Republicans, already putting Biden and Warren camp in a very tough spot with their anti-crypto stance. You mix that then with this news, and it's pretty obvious like what's going on here. And then the FDIC there is kind of sprinkled on top, and all these, the FDIC chair that's stepping down is, he led the Choke Point 2.0 campaign against, crypto and banking mixing together. Obviously this reflects very poorly on Gary Gensler, who, supposedly from even staffers within the SEC found this to be very surprising reversal. And so it's just really unfortunate in terms of it's really just to win an election, that they're coming to the table and not actually analyzing these rules and regulations on the merit. But that's how you get things done in this country and in politics, and it's definitely a result of Trump positioning as pro crypto and Biden falling behind in the polls. So when you read through this news and just the aggregation of all of it together, you see a much more favorable regulatory environment across the board for crypto. And so this means stablecoin bill is going to get passed. There's obviously outstanding litigation against a number of crypto entities. In the public realm, you have Coinbase and Robinhood, two very large players in the retail and institutional on Coinbase side trading. And this should benefit everybody who's touching the space and allows at least a pathway to proper regulation. So I think personally, I said this in our chat. I was like, you give me a blank sheet of paper and said, write up, some of the most bullish things you could think that would happen in the next month. I mean, this gets pretty close.
Okay. Look, absolutely.
The only thing further I think you could think is like fully dropping all the lawsuits, but that's never going to happen. So I think it's huge for the industry.
Right on. Take a look at this post by Rygiel from Electric Capital, well-known, successful VC. And he's responding to the claim that the Dems are realigning on crypto. He's got a different take. He says, hey, these sorts of takes are bad and wrong. When Trump is, quote, for something, Dems are glad to be against. Dems are moving on crypto because of a realignment of power inside the Democratic Party. In 2020, Biden needed the far left to win. In 2024, he needs the moderate left to win. So there's story number one is that Ryan Selkis is there with Donald Trump, 2 weekends ago on stage. Trump is embracing crypto. That goes viral, a couple million views. And then that forced the Dems to run towards this policy issue to capture, the marginal vote in these swing states. Rygiel is saying something different. He's saying actually the factions in the Democratic Party are realigning. And there's some evidence for that in that, you do have folks that are under 45 in Congress that are supportive of crypto legislation. And also Senator Warren's pseudo appointees in the FDIC chair are now sidelined, and it looks inevitable that Gensler will be leaving. So any views on, which of those two stories is accurate?
I think it's more RFK Jr. Impact as well, right? So especially since he presented himself as there are two crypto candidates, right? There is Trump and RFK, and one of them is clearly aligning themselves with being the one that wants to take over the Democrat-leaning, let's frankly call it the female aspect, right? Being so clear about his abortion views. So I think it's more like trying to at least reduce the impact on the men's side, which at this point would have obviously been lost to Trump. So it's, let's call it triangulation, because I think RFK is actually going to play a very important role in there. Again, I'm not really saying anything insightful here, but I think the tweet by Rygiel should be read a little bit more like he should have put RFK in the mix, because I think it's reasonably important in terms of how it plays both with crypto and for the election in general.
I think his tweets could have merit to it, but I think it ignores the elephant in the room that why would these, let's say they are moving just on their own, why would they do that now? They didn't move 6 months ago, they didn't move 3 months ago, they didn't move a month ago, and there's an election to win. And so I think, there's definitely Democrats that believe in the industry, but everybody's been glad to sign with Warren and on this for a long time, and it's an election that we know where incentives lie.
Well, yeah, look, I think people are starting to appreciate that there's an extraordinary amount of wealth that's been created in the crypto category. There's a city in the town of Puerto Rico called Dorado, which has hundreds of millionaire type folks and the billionaire folks in crypto. There's Dubai, folks in Singapore. There are expats from China. and they have increasing influence due to that. And if you have a small, vocal, organized, targeted group, then they can be highly effective. We've seen that with farmers, right? The farm bills, there's less than 1% of Americans are farmers, but they get disproportionate benefit. We've seen that with the banks as well, right? Jamie Dimon is now petitioning for better capital treatment, meaning looser capital regulations at Congress. 2 months ago, he was critiquing crypto and really kind of parodying Elizabeth Warren's talking points. Now he's maybe coming back for the dessert side of that trade. Both of those, though, were generally bipartisan approaches, right? Those two groups generally have the support of both sides, although there are some tilts here and there. And I don't know, I'm hopeful that crypto has a bipartisan story to it, so it's less cyclical.
There was an article. There was an article back. I think it was Steve Fuller. He was at the University of Warwick, but he wrote something back in Aeon, back in like fall of 2013, where he thought there's this paradigm shift of left versus right is moving more like a top down in terms of within both parties. There's going to be groups that will embrace technology and innovation, and then there will be others that will want to kind of push back against technology and try to embrace the social kind of connections and natural order, if you will. And I think that's what's happening in both parties. We're just seeing it more visibly in the Democratic Party now, where I think there is a shift of those that are technologists, globalists that are looking at how do we leverage technology, and then others that are kind of backing down a little bit. And I think that's what we just saw live time now in the past just 48 hours.
Right. I mean, there's this desire to be globally competitive, whether it's semiconductors, whether it's Taiwan Straits, whether it's EVs, and if digital
biohacking, do-it-yourself biology. I mean, I think this is where it's do we look at risk first, or do we look at the benefit of those risks? I think, back hundreds of years ago, it was, taming the Wild West or the American Revolution with fur trappers. I mean, it's always something where people were pushing the envelope. Now it's not so much a geographic risk; it's an online risk. And I think there's also kind of this pushback just from a generational shift of younger generations want to try to maybe move out of everything being safe, everything being in a container. And online is there a way of expressing this ability to be an individual. And as more and more pushback from social media and more of you have to fit in this box or else you're against us, or if you're not even with us, then so I think there's an individuality piece that is appealing to any type of political alignment. And I think that's what we're also seeing is social media is changing. People don't want to just be kind of throw things out, being pseudo-anonymous. I think in crypto brought in all these different types of people. And for now it's giving us a voice of maybe we don't agree, but we don't necessarily disagree either. And we can kind of work through it. And I'm really bullish on things like Ethereum and Solana and also Bitcoin. I just view Bitcoin in a different paradigm shift of really internet money. And I view the supercomputer, the immutable smart contracts or persistent variables that can really be allowing anybody to write code as just another iteration on top of that.
Yeah, no, it's a great way to frame it. It's a shift from risk aversion to what's the opportunity and the upside. I do believe a lot of this is political. Politicians will do anything to get elected. And this and the timing of it, to your point, Quinn, just looks like a response to grab the marginal voter in states that matter, like Florida. But in any case, so where are we now? So, Quinn, there's been talk about this banana zone. Banana zone is this term of art introduced by Raoul Paul, technical term here, where there's an everything go up rally. And, over the weekend, you shared this thesis as well. Do you want to double click there and share your outlook? And we'll ask the same question to everyone else too. And Dimitrios, if you've got insight in the options market and what you're seeing right now, I'd love to, talk about that too. So Quinn.
Yeah, I think I love the banana zone. It's so memeable. So shout out Rob for that. And I think we look at some similar things, but my process comes from a bit of a different angle, but arrived at same conclusion, which is why I love it so much. But I think the broad environment that you need to think about is very akin to 2021, because in 2021 we had a recovered economy that was strong and growing at a good baseline nominal level, and we had inflation. If you think about growth and inflation, we had inflation that was first coming back and labeled as transitory by the Federal Reserve, and then obviously became more problematic towards the end of the year. That caused a response. But if you think about the environment now, it's very, very similar. We have fiscal stimulating at the same rate in percentage of GDP terms, between 6 and 8%. And we have inflation, which has obviously come down significantly, but it is not going down any longer. It's at a minimum, it's flat. At worst, it's slightly trending back up. And you look at the Federal Reserve and fiscal authorities' response, unlike 2022, in this year, we are getting a response of easing their restrictive stance. So everything you hear is rate hikes are off the table. The next move will be a cut. And in the background, that's the Fed funds rate. I'm a big believer that actually it's the long end of the curve that's much more meaningful in this regime. And then on the long end, you have the Treasury controlling the duration of their debt issuance, tapping the RRP to drain and boost liquidity, and the Fed winding down its quantitative tightening, balance sheet tapering by more than expected and sooner than expected at the last meeting. So you have this environment where, okay, we acknowledge that inflation is here and it's entrenched. Look at infrastructure commodities. Obviously, oil, the bellwether, is lower, but look at every other commodity in the complex and it's strong. But the Fed has said they're not going to do anything and they want to support growth. So in that environment, you need to be invested into things that protect your purchasing power from inflation and that are hedges, and that includes pretty much everything. When the economy's strong, that includes small caps, that includes crypto, that includes tech. We have NVIDIA earnings this week that could be a focal point and mark a turning point upwards for the AI boom again, which is taking a breather here. So that's where I come at it from. And really the market, similar to 2021, I think is going to take the latter part of this year to basically elicit a response from the Fed until something changes in their stance. And we know with an election in November, that's just very, very unlikely. So that's where I come to. And then obviously on the crypto side, you have these microeconomic tailwinds with the regulatory winds changing. But I think it's a very, very supportive environment for risk across the board.
Thoughts, Dimitrios, and how are folks positioned in the market right now around options? Clearly quite a few people are caught off sides. Kerrisdale, which is a prominent hedge fund, they're a long short hedge fund. They made the decision to short MicroStrategy publicly. They published their short position. And David Einhorn's a pretty smart guy. He never does that. I did note that while crypto assets are up today, MicroStrategy shot up quite a bit yesterday and is actually down about 1.67%. So I thought that was quite interesting. Markets always keep people on their toes. So Dimitrios, thoughts on what you see in the options market and how folks are positioned? Yeah.
In general, describe how I think of markets in general and how volatility informs it. So volatilities across assets are at extremely low levels in stocks. Interest rate vol is still very high historically, right? For good reason. So I think the tactical setup for equities is not the most constructive. I mean, exactly in environments where you cannot, like from retail sentiment to the street capitulating, I guess it's only JP Morgan and Kolanovich left who is bearish, right? So there is only one high profile person left and he's not really that vocal anymore. NVIDIA is coming at a setup that is different than last time, right? So we are 20% of the lows like a month ago. So vol is actually marginally low into the earnings. So I would think one would get a better entry point. And I'm coming back to the crypto point. I actually like for crypto to have all these great headlines in an environment that is not as constructive risk as it would be, because when risk inevitably recovers, you would want crypto to continue going up, not to be not to grab all the attention possible early enough. Crypto will have this tendency to go all the way bananas, right? So I think for the industry's benefit, it will be better to let it happen while the rest of the markets works its own excesses over. There's never a straight line in markets. With positioning full again, with summer coming up, elections coming up, and we always never need to forget that the more equities go up, the less probability there is for rates to come down, especially in a fully politicized environment as we get closer to the election, where Trump is ready to change the Fed, especially if even more so if he feels that they tried to help Biden's re-election chances. So we're in this situation, I think, where if market stays supported, the less probability there is for rates to get cut. Conversely, the rates will get cut the moment the market realizes that it's really gotten ahead of itself. Hence, it only support would be cutting rates. So now, vols in crypto markets obviously moved up significantly higher. But here we're talking about structural, like seismic events that vol markets are not well placed to price. Normal distribution, log normals break down in this situation. So I still think, and I use this moniker in my tweets, that I've never seen a vol I don't want to buy. Now it's probably one of the few markets today that you are sort of tempted to stop, but there are multiple structures you can still play for the extreme events that it seems will get a lot more going forward. So in the crypto market. So.
Very nuanced perspective there, especially your comments around equities being fully priced, but crypto potentially having room to run while that's happening in the background. I will note, I just showed on the screen a moment ago that over the last few days you have been seeing a trading down of names that have worked quite well year to date, especially semiconductors and information technology, and other names that are more expensive like Nvidia. FICO, for example, is down 5% today. And you're seeing other names like industrials and other themes that are starting to move up here. So then we'll come back to positioning within crypto in a moment. Let's talk about where this goes from here. So I'll share this screen here. So we talked about some of the short covering dynamics that are playing out. Clearly, there were quite a few liquidations that we saw yesterday. So Biden approves crypto bill. Is that consensus now? Any disagreement with that point of view? Okay, so the ayes have it. Nick, go ahead. Were you on mute there or no?
I mean, it's one of those things where you just wonder. Reasonably, the common sense approach would be that he would not stand in the line of it, but it would be, I think, very detrimental. But I mean, these recent events seems like it's not going to be something that he's going to push against anymore.
Right, I agree. And we didn't know that yesterday. Consensus was that he would veto this. So if you believe that there's been a policy shift on the Democrats, then there's I have this image of a drop of water and the ripple effects. And I think trying to trace out how things unfold, like what's baked in the cake today, right? So say Biden approves crypto bill. Okay. I'd say the Warren faction is neutralized, right? FDIC Chairman Marty Gruenberg is resigning. Gensler has got whipsawed, first of all, right? I mean, this guy was like Anakin Skywalker, supposed to be the bridge from TradFi to crypto, was giving a lecture at MIT talking about the founder of Algorand and all this. And now, he didn't deliver and, perhaps taking direction from Senator Warren, his, the person who nominated him. And now here he is approving, probably begrudgingly, these ETFs. It doesn't look like the ETF will have a staking feature. So they're going to try to thread the needle on the nuance there. But it looks like his tenure is going to be up perhaps after the election. I think these other ideas are quite interesting. So, one of the issues in crypto is that you've got Bitcoin miners that are public, but really it's Coinbase. And having successful public market exits is important for the venture capital ecosystem. It adds legitimacy, it adds validation, it adds public trust, but also it adds the M&A cycle, right? When Cisco went public, they started investing in acquiring all of Sequoia's, or not all of Sequoia's, but many of Sequoia's networking startups. Sequoia helped, of course, invest in Cisco. So, what is the next major public event that markets focus on? I think it might be a Circle IPO. They filed an S1. It could be a de-SPAC. Any thoughts on likelihood of that or any other reactions?
I don't know the likelihood of it, and obviously they went down the path with the SPAC in 2021, and that ultimately got called off. So I don't have any informational edge on the likelihood, but I think it's a massive deal and really the next bellwether to go. I think they're probably the closest. And what's interesting about it is, obviously everybody in this industry is looking for mass stablecoin adoption. I think personally, I believe it's the killer use case of crypto thus far. And I know that, could be the iPhone moment, let's call it, for the space. And so interestingly enough, it's one of the more complicated businesses probably to go public, or at least new, that the public markets would see. It's a simple business, but I should say regulatorily complex to get across that line and actually go public. And I think it would create a great precedent. The businesses I think about that would be behind them would be the Krakens of the world, maybe the Geminis, and companies that look more akin to a Coinbase or Galaxy. Some of these companies that are public and the markets understand them. Chainalysis, yeah. So I think I totally agree, Ron. Like, one of the things that helped in 2021 was the tremendous access that crypto companies got to the public markets. It was mainly dominated by miners, but we obviously also saw Coinbase and MicroStrategies and there was other private debt deals. DCG had debt deals, Genesis, etc. We need to get back to that environment where institutions feel that comfortable, right? They're not just dabbling with a 1% allocation Bitcoin, but they're buying institutional names and credit or equity paper from these businesses.
Right, and I agree. Like, stablecoins can have the potential to be the killer app. Neil Kashkari, a Fed governor, a few months ago, was giving a classroom talk somewhere, and he asked everyone to raise their hands on who's exchanged money with each other using stablecoins. And all of us have, and we know that experience works. It works. It's a lot faster and it's cheaper than a wire transfer. But look, I think if Congress can pass a stablecoin bill, that probably is a dependency on a Circle public markets offering. And you start to get competition then for all the credit card issuers that are charging a 3% take rate on merchants that have a net 1% profit margin. And that helps ordinary Americans. So that's just good public policy. Helps cross-border remittances. I think people forget that there is a broader impact. This is decentralized technology where you don't have counterparty risk like you had in 2008 with the too big to fail banks that were bailed out by taxpayers and had loads of subprime securitizations or misrated because you didn't have loan level transparency. Like, that world needs to stop. We still live in that world today. Securitizations that are not publicly registered, of which there are many, you still don't have loan level transparency. So look, there's a potential for good public policy here. Any other thoughts on what captures the public consciousness? I think that's crucial for asset prices, right? In 2017, we had Bitcoin, the ICOs emerged into the zeitgeist. Then 21, we had Ethereum and the rise of DeFi emerged into the zeitgeist, meaning it went from a crypto native world to the consciousness of the public. In fact, of course, in 21, we had Tesla starting to enable the purchasing of Teslas with Bitcoin. They stopped that. Visa invested in their crypto division. MasterCard did some M&A in crypto as well. So in 2024, what emerges into the public consciousness? Is it Solana and retail use cases? Is it stable coins? Is it a Circle IPO, or is there some other theme that you think emerges that kind of brings in the next concentric circle of customers and capital?
I mean, I would just throw in.
I think
the safe harbor
is something more than Circle,
Sorry, Nick, go ahead. Then
No, I was just going to say, I mean, I think, and I mean, the stable coins would definitely do it. But I think also if there's any type of mention of like some sort of safe harbor for developers, I know there's a few that are very resistant to even enable their dApps or mobile apps, for example, to U.S. consumers. So if there was any type of reprieve to that, I know there's a lot of people that are scared, and it's going to really affect the infrastructure and the safety of these consumers here in the US if they're not allowed to use the latest infrastructure or the latest development and apps. So I would love to have some sort of kind of momentum there.
Makes sense. Dimitrios?
Yeah, I was saying, I hope it's something more than the Circle IPO. I don't think Circle is like them. I mean, all respect to the business, right? But I think it has, the moat is really non-existent as far as I can tell, right? Thinking of it from an investor perspective. So I'm not sure if it will be, I think, an issue of public consciousness. Like what would be more exciting would be for everyone to have stablecoin initiatives or even stablecoin with interest initiatives. So I'm much more focused on, let's say, Biddle having a lot more to say and making it an equivalent, like eating Circle's lunch and establishing themselves as the stablecoin equivalent, because exactly like there is a big thing among academic economists over the last 25 years that remains my pet interest in terms of paying interest on why wouldn't we have access to T-bills, right? Why to begin with is currency not paying interest, right? So I think it makes it all the more obvious that this is a way to evade it. And I think what BlackRock is doing is a lot more exciting, not just because it's them, but many have tried, right, to pay interest on money. So that will be the most fascinating component I would be watching from a mass adoption perspective, for people to be able to hold in their wallet something that pays interest. So rather than the Circle IPO. But, yeah.
That is a great point.
The other thing I think we hit on was the FDIC and banking regulation. I mean, if anyone's ever tried to start a business, whether you're asset management, operating company, it's a big game of hopscotch to get access to U.S. banking rails. And this is a deterrent for a number of things, but one of them, is entrepreneurs with bright ideas and moving overseas to avoid that, as was mentioned, but also just the capital formation and access to traditional financing and day-to-day operations. So I think, you get something like that passed where, the JP Morgans and the big players start, BlackRock's already doing it, but the actually regulated FDIC banks to be able to touch crypto, I think you get a very quick, we saw it here, right? We saw the Dems losing their election hopes and they changed their tune in maybe 72 hours. You're going to see that from Jamie Dimon and everybody else too. The second they can touch it, it's going to be their favorite thing in the world because their clients are going to be clamoring for it and they'll be the biggest pushers of it. So I think it's just little things like this, one at a time, you knock some of these barriers down and that can be an avalanche of the ripple effect, as you mentioned, Rob.
Two fantastic, points there. Like one is what bank CEOs say and what the organizations do are very different. Goldman Sachs has a highly capable digital assets team. I'm very critical of Goldman in general, except for that group and maybe their chief economist, perhaps. But, they've got a prime brokerage desk. They're doing lending. They're making markets. They're very active behind the scenes. JP Morgan also has a crypto group as well. Of course, Christine Moy came from there. She's at Apollo now, leading their digital innovation efforts. And the other point around bank distribution, I think, is crucial, right? So banks, for millennia, the first function of bank was to provide custody before deposit taking and lending, rehypothecating. It was custody. It was to keep your assets safe. And banks have a natural role to play for custodying digital assets. And they have distribution to hundreds of millions of Americans. People trust their local bank. They have a banking relationship. So that is a natural, unlock to expand access and reach, including to communities where they have, they're paying 5% check cashing fee at their local money transmitter in a sketchy part of town. Like crypto can fix that. We talked about the merchant use case, and banks are a natural source of distribution. Bank of New York Mellon, I've been told, is fully ready to go. They're ready to launch a custody offering. They spent tens of millions on this. They've got the whole private wallet MPC infrastructure set up to do this, but they can't. You know, my prior role to Lumina, I was the exec that built the crypto business there. My client was Coinbase and other players in the ecosystem. I can tell you, the day FDIC chair Helena McWilliams resigned, who is a very capable and impressive FDIC chair, wonderful immigrant story as well. But at FDIC, Marty Gruber became the chair. It was night and day. It went from warmth and constructive focus on innovation with clear standards and guardrails to cold water, stop banking as a service. And, what Nick Carter highlighted as well, which, you referred to earlier, Quinn, as Operation Choke Point. You saw the headlines around Signature Bank and the, uneven treatment of banks, including banks that were well capitalized and, disappeared over a weekend. So I think the point around a new FDIC chair is crucial. And we need who the new chair is, and also how the Federal Reserve settles or resolves the custodia issues, which are now taking place in the court system. Is there any impact on that? So I'd love to hear what Caitlin has to say there. I know she can't say much because she's in litigation, obviously. But with that said,
the big point here is just it's just broader access. Like, there's something to be said here about opening up a path for protocols to register. We see the inner workings of Coinbase, so we trust them. But to the average person, having to download an app and use that for access instead of going to your traditional brokerage, I think is a big difference. And this starts to get into all sorts of, accredited investor rules, and things like that when it comes to retail investing, I think. So it'll be interesting how that develops, because there is an argument to be made that, stocks and investments go up over time typically. So it's better to have retail participating in the markets than just straight away gambling in Vegas, which is a huge industry. So I think you would look to that, some of those restrictions to get relaxed in a, Republican win in November, and that could be a big favor too.
Right. I mean, there's an opportunity for SEC Chair Gensler to redeem himself. He can be the Anakin Skywalker at the end of the great series where he picks up Palpatine. Maybe that's like the Warren faction metaphorically here. And then, turns his, he understands crypto, he understands digital assets, and he should understand that, the four-prong Howey test doesn't quite apply. And other SEC chairs get it too. This is Arthur Levitt, former SEC chair, bipartisan, longest serving SEC chair. And, we co-wrote this op-ed in the bottom of the bear. And here's an SEC chair who's on the board of BitPay, one of the first firms to enable merchants to acquire, enable settlement with digital assets. Those are Arthur Levitt right there. So, this can be a bipartisan issue, and that's an opportunity. So I know that there are staffers in the SEC that want to advance a framework that makes sense. That means issuing interpretive guidance. So there's clarity. Interpretive guidance says, hey, if you've got this scenario, you've got these characteristics, then here's what it means for you. That's one. They can do that tomorrow. It's not that hard to do that. There are questions. They can answer the questions. Number two is updating reg crowdfunding, because it's incompatible with decentralized assets, enable the creator economy to participate. Why can't the next Taylor Swift distribute royalties to her fans who can help promote her campaign, and everyone shares in the upside? And now you've got a new asset class where fans can actually underwrite better than Goldman Sachs because they have taste, right? So I agree. That's let's see what happens. There's a lot that'll unfold in the next few months with those renomination decisions and the actions of Gensler. Nick, it's on your mind.
Yeah, I mean, I think this is very exciting because it came out of nowhere. And when things come out of nowhere, it forces everyone to kind of reconsider all points of view. And that leads to folks like Quinn, for example, to be able, like, wow, I think the past couple of years, there's been a lot of negativity and it's been reinforcement. And so it's very hard to believe that we can have anything other than a hard landing, for example, and then suddenly something come out. I mean, AI came out of nowhere for most folks that were not, just in terms of public awareness. And now I think self-custody and the sense of what that could bring in terms of ownership rights and granting permission versus asking permission is a big paradigm shift. And I think most people just don't have the time and focus to really focus on this thing. So being able to maybe work with someone that is in this kind of the day-to-day areas to say, this is what you might be want to look at, and here's ways of getting more involved. When there is a financial investment in something, people pay more attention to it. And I think now this will bring more folks back into the space that have just kind of written it off.
I totally agree. And on that point, really pleased to share that Lumina is the first SEC registered investment advisor that will enable investors to invest in digital assets while maintaining custody. So we had to do a lot of work with lawyers to ensure we comply with the custody rule, and we do. And now for the first time, investors can custody their private keys. It's not custodied by Lumina, not custodied by any custodian. It's held by the client. And we're enabling that to happen, which hopefully is another layer of the unlock. And that's enabled by technology. But Nick, do you want to double click there?
Yeah. I think the core is, if you have assets that are with a custodian right now, that you're looking to say, okay, what do I want to do more with these assets? Especially if there is an Ethereum ETF. The difference with an Ethereum ETF that doesn't have staking and one that does is the same kind of when we were talking about stablecoins. Are you getting paid interest or not? Is there a maximum kind of strategy that you can utilize? And those strategies are on chain, having it in your own possession, while also leveraging the actual blockchain. So we talk about blockchain and crypto and public markets and Ethereum, Solana, Bitcoin, everything, but having it in a ETF is one way to get exposure, and there's definitely times for that. But then if you want to take it to say, how do you really look at strategies beyond this? It really means getting your assets in a self-custodial wallet, but also avoiding a lot of the pitfalls with that, understanding the difference between a multi-signature wallet versus a hot wallet, or MetaMask versus a Coinbase wallet, or the Prime wallet, for example. So working with Lumina, being a sub-advisor, helps me leverage my expertise in this area while also making sure that we are covering all the financial planning, all the investment analysis, everything else that goes into it. So I'm proud to be part of it.
Trust, tax, and estate, and
absolutely, it's not just exactly. It's all the above, and then there's this component that many folks just don't have the time. They might even be aware of it, they just don't have the time and focus to implement it themselves. But they can take a few minutes out of the day or every couple of weeks to approve transactions that are already catered and specific to their individual wallets that they still maintain full control over.
What are your thoughts, Quinn, on positioning now? So like my quick reaction is Ethereum ecosystem re-rates higher. So I'm thinking like blue chip DeFi, Maker, those kinds of ideas. What's your take?
Yeah, I definitely think that the ETH and broader ecosystem has its moment here. It's been completely left for dead relative to many other assets, and it's kind of funny and ironic how, while the, let's say, discussion within crypto about these low float, high FPV new token launches has kind of reached a peak, a pretty decent alternative in, a legacy beaten down Ethereum ecosystem and DeFi coins, has presented themselves in an environment where the regulatory, winds are changing in their favor. So I definitely think there's some place to be made there. And similar to kind of my everything rally, the banana zone thesis, I think, this is the time in the cycle where if you do continue to get this, supportive Fed and monetary authorities for growth and prioritizing labor over inflation, it's when you start to get, broader strokes of speculation and outperformance in everything but Bitcoin. So that means, Solana is probably doing well in that environment, broader kind of alt as well, where there's quality. So I'm kind of looking outside the risk curve on these things, and keeping a bias towards quality. But there's definitely been areas of the market that have people ignored for the better part of.
So catch up rally in ignored names that are quality assets. That's number one. And then two, what was your take on Solana there?
I think Solana also stands to benefit, right? Because once this official announcement from the SEC comes, the next asset to speculate for an ETF would be Solana.
I think that
and
speculation.
Yeah.
Yeah.
I think it's probably still
I would
far
say
off.
this
We
is
need
so
the futures
far
market,
away, right?
But, yeah. The broader
exactly.
point is
That's
just
what I
around
was saying.
the broader point is just around if we really do hit a very supportive environment for risk, you're going to see activity inflecting on chain, activity inflecting, fee generation for these protocols inflecting, and that's bullish for smart contract protocols and layer
It'll
ones
focus on
over
Ethereum
Bitcoin.
first, and when the market has its fill, and you see the ETF in sight, then markets will start to look ahead and say, what other ETFs possible? Go ahead, Nick.
I think it's going to be tandem. I think we're going to see both at the same time, because with the bridging everything, it's going to also go from the L1 levels or L2 to then also looking at these apps that are across multi-chain. I mean, Render, for example, was one that you can get the optimized from a token allocation. If someone has that on Solana or mainnet Ethereum, that's going to start happening. There's other projects that have, like Gala Games, for example, they're in multi-tiered. So we're going to see that, I think, across multi-chain.
Fair point. Dimitrios,
Yeah,
any
that's a good
thoughts?
point. I like the AI thing.
Yeah, well, it feels to me like VCs got slightly underpositioned into this. Look, I run a protocol on Arbitrum, right? And I would say over the last 2-3 months, a lot you were hearing were like the Bitcoin L2 ecosystem. There were at latest count like 140 Bitcoin L2s. Everyone was talking about Bitcoin Renaissance and everything will be built on Bitcoin. And I think there is a lot at stake there that I think a lot will happen. But I think a lot of it had taken away interest on Ethereum, and conversely was only there as a repetition. Let's do whatever we did on Ethereum, let's do it on Bitcoin. The last 2-3 days, there was also a major hack in Darling in the Bitcoin DeFi sweepstakes. And obviously, Stacks has not really proceeded with their upgrades as expected. As expected, meaning they have like a different way of delivering things, right? So I would say that what you described in terms of getting under positioning on Ethereum ecosystem is not only just on liquid as we saw today, is across the VC project ecosystem. I found it funny, I don't know if it's funny, where it's only the last 2-3 days that the Ethereum Foundation people came out as advisor to Eigenlayer, right at the bottom of the market, right? I think it was like amusing to see like how everyone was sort of like embarrassed coming to say, look, I'm now an advisor to Eigenlayer, even though I'm on the Ethereum Foundation, and bam, one day later, Ethereum up 25% and they look a little bit different, right? So I think there is the underpositioning cannot be corrected within a day. As we said, just on the liquid side, it will be the same on the liquid and project and everything else side.
Yeah, no, I agree. This is an asset class that teleports. It moves quickly. You have to be pre-positioned, and then it goes. And we saw that again in the last 2 days. So if you're pre-positioned, great. But now, once again, you've got people sidelined money. This is something I don't think is fully appreciated. There's still a lot of liquidity on the sidelines. And that's because active traders and institutional buyers and sellers are setting the marginal price. You don't need dollars to inflow to get back to your market cap or all-time highs, right? Markets will do price discovery quickly. And there's a lot of capital that has not participated. And everyone's waiting for the pullback. And there are periodic pullbacks, but they are short and shallow. This is true in all the markets, equities and crypto, by the way. So in the equity market, we did a study of historical periods that had achieved similar overbought levels because the S&P had a record string of consecutive months that were overbought. And what we found is that the best you get is like a 5%, 6% drawdown. I think it was 1985 and 2015, I want to say. And we had a 6% drawdown and you're back. And in crypto, this asset class did not retouch its 200-day moving average. And, here we are. So, this is I'm sharing the screen here. It's from James Seyfert at Bloomberg showing the Ethereum ETFs. Like, I think the simple thing to focus on is what are the flows? It's core. This is what's driving inflows. You can see the schedule. These are some of the Ethereum ETFs and then the final deadline. So May 23rd, Van Eck is on deck first, followed by ARK, Hashdex, Grayscale. I heard that Michael Sonnenschein, the CEO of Grayscale, is leaving, and that was a curveball. Guy's got like the best gig in the world as far as I can tell. Invesco, Fidelity, Fidelity, iShares, that's BlackRock. These are big brands. Franklin. So, I think people are going to look at the Bitcoin performance pre-ETF and the run up there and post-ETF. We're seeing the pre-ETF run up now. That's getting priced in now. And then there's the post-ETF dynamic. We'll see how that unfolds. Any thoughts on the upcoming ETF approvals or any other concluding remarks?
I think we should do a little friendly wager, Ram, as to when the new Vanguard CEO is able to get that institution on board. So that would be a fun one because, that was a big commotion when BlackRock led the way and came with IBIT and now with the ETH. And this guy was kind of the shepherd internally of that movement. And now he's the CEO of Vanguard, which was pretty anti-crypto before. So it's got to be before year end is where I'd probably set the over under. But it'll be interesting to see how much room they're giving him to operate.
That's a great point. That's a great point. You have the new generation is taking leadership roles, and we talked about the resignations at the FDIC level. You're seeing Jamie Dimon talk about retirement now. You saw James Gorman at Morgan Stanley; he stepped down. So, it's becoming politically relevant as well. This is, to quote the Matrix, Agent Smith, this is inevitable. It's happening. You can ignore it or you can find a way to participate. All right. Any wrap-up thoughts, Dimitrios, Nick? Quinn, I think you know what? I'll take the over on that, by the way. I think you're right, it'll happen. I think Vanguard will be the last to move. I think they'll
okay, we'll do 12/31/24, and I'll take the under.
We'll do a trading places bet.
Perfect.
High stakes. So in case anyone's seen that legendary movie. All right.
$1.
$1. There you go. Well, in current terms, that's like $1,200 or something, right? So we might have to reprice that or have like a gold bar, I suppose.
But if he had interest rate money, it would be fine. It would have been fine.
Right. Exactly. We'll swap uranium or like Bitcoin, I guess. But Nick, Dimitrios, any concluding thoughts?
None here.
All right, Dimitrios. All right, great.
And let's stay long. Stay long crypto.
Stay long crypto. There you have it. Well, you can follow these folks online. Take a look at the post. We got their Twitter handles there. And do you guys have any other ways that people can stay in touch and follow you?
Yeah, Twitter best here. I publish occasionally on Substack or the Twitter articles.
Terrific.
Yeah.
Well, thank you all. Really appreciate the Instapod. Feel free to reach out to Lumida for that crypto white glove service. We're going to announce it next week at Consensus, but we thought that now's the time to get active. So feel free to go to lumina.com and you can learn more about that. Thank you all. Have a good one now. Take care. Be well.
See you guys.
Thank you. Bye-bye.